Israel, and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Tuesday, and welcome back to another episode of Benzinga Live. Hope everyone had a good weekend. It's good to be back in the office. Good to be back in Detroit. Going over the market real quick, the S&P 500 is down about 0.3%. Your Qs, a little bit lower than that. Right now, down about 0.5%. Let me go ahead and get my Benzinga Pro pulled up. We can go through some of the top movers of the day, as well as some of the top headlines of the day. We also have a couple interviews coming up at noon and at 12:30. So excited. So yeah, let me just go ahead, pull up my Benzinga Pro, run through the market, what's going on. Let me know in the chat what you guys are trading. I see Smoke Tuna talking about OLPX and MOBQ. I haven't heard of those, so I'm just gonna go ahead and assume without even looking them up that they're penny stocks or probably some cheaper ones. J Rice saying Cocoa is hitting all-time highs. We'll take a look at that for sure. Some other stocks hitting all-time highs today as well. So yeah, take a look. One of Raz's calls. I don't know if Raz is out there, but Eli Lilly, months ago we were talking about it with the weight loss drugs coming out, becoming more and more popular. Eli Lilly making new all-time highs as well. Eli Lilly's been just an absolute monster on a tear. Oh, it looks like Lilly's actually coming down a little bit now. I think it hit new all-time highs either earlier today or at some point in the last week or so. All right. There we go. Now you can see my Benzinga Pro. All right, so Eli Lilly right now, the dividend next date is in 3 days, so people wanting to get it now for the dividend, which I don't know. Let's see how. I don't think Eli has just 1%, so I don't think a lot of people are really going to be getting in specifically for the dividend. But as you can see here, I mean, the chart, the stock has been basically just going straight up every single day since March 23rd. We've gone from 311 to 431. So more than like let's go to a monthly candles here so we can see. I'm gonna say that's like 30%? Here. We can check this. This is what Google Finance is really good for. $312 up 38. The stock is up 38% in 2 months, which, look, 38% in 2 months may not seem like a lot if you're talking about a crypto, if you're talking about Bitcoin, if you're talking about a penny stock. But for a $400 billion company like this, going up 38%, I mean, there's multiple things going on right now. We talked about the weight loss drug and that, that's becoming more and more popular. People talking about it on TikTok, which, first of all, mentioning TikTok, anything right now that becomes a TikTok trend, like organically, like not through, paid advertising, whatever, just kind of like everyone's now talking about the weight loss drug. Oh my God, you can lose 20 pounds. Just all you got to do is take this shot. That's like, I think in itself could be an investing strategy, right? Looking at, going back to, which I know this stock has come down a lot, but Celsius, ticker CELH, this one was another one that like became the hottest thing on TikTok just organically, which is like billions of dollars of, not for, Celsius specifically, billions of dollars of marketing, but out there, TikTok is, will get companies millions and millions of free advertising if it becomes just an organic content trend, which we saw that happen with the weight loss drugs. So you have that there. And then we also had news last week, or maybe it was 2 weeks ago at this point. Oh my God. Safari, it keeps trying to autocorrect. We had news last week about an Alzheimer's drug that Eli Lilly had good data on in its phase 2 trial, I believe, which is very, very significant because, and we talked about this. I talked about this last week with one of our guests, that Alzheimer's is a drug that impacts like so many people. The market opportunity there is absolutely insane, and no pharmaceutical company, no biotech company has really been able to crack the code on what was the one was it BBIB Biogen? This one had a huge run at some point when it had some decent Alzheimer's news. Looks like it's actually been potentially running with oh my god. I'm using Safari because Chrome wasn't working for me well, and now like it won't let me do anything. I think this is, I think Biogen, this is the one that ran up huge with other Alzheimer's news, and then looks like Eli Lilly. Cocoa. I'm not super familiar with. Oh, I know this brand. Yeah, the coconut water. I guess, Jay, the lesson is here is that the beverage business isn't a bad business to be in. Coconut water, CELH, Monster. Monster is one of the best performing stocks of the last like 20 years. I didn't realize Monster was back up all the way up here. I mean, going on a monthly chart here. Look at this. Even if you didn't get in till 2012, which I forget what this stock was like called back in the day, but I mean, this thing has just crushed it. Absolutely crushed it. Monster Energy Drinks, CELH. I will say, I don't hear as much about Celsius's that I did, say a year and a half ago or 2 years ago. I'll still drink a Celsius every now and then. I still enjoy them. Still good. They've got some good flavors, and they're supposed to be healthier than other, energy drinks. But I don't hear as much about them. 10 grand in Monster in 1995 is 23 million today. Wow. So the question is, what's our Monster? What's our Monster today? I mean, this coconut water, I see it everywhere, and like I feel like, I feel like health trends are just going to be becoming more and more. Although, I don't know, like me personally, like I never buy those coconut waters. I know people that do. I don't like coconut water that much, by the way. So maybe I'm just not the best demographic, the best target audience for them as someone who doesn't like. We also still, I mean, the other big thing, the other big news, and one thing weighing over the market right now, which we're gonna bring someone on and to talk about as well, but the debt ceiling, you had Janet Yellen come out and say that the government was at risk of running out of money by June 1st. That's coming up. That's in about 3 weeks now at this point. So the market investors have been, a little bit worried about what happens if we get to this June 1st deadline and there's still no solution to be found. There was a headline that we can go to the article of that Mitch McConnell basically said, look, like don't expect, us, meaning, his party to cave and come up with a deal toward the last minute. Like there, it doesn't seem like this position of gridlock. It still seems like all the elected officials are in gridlock. Nothing's really happening. I think the market, I think, is starting to get a little bit worried about that. We can see too, I mean, great jobs numbers last week, which could mean that the market, that the Fed hikes, which the market also doesn't like. Cocoa, it was strictly a market cap trade-off of, oh, wow. Yeah, I mean, and if you look at if you look at the market opportunity, the market size of just like how many people are buying coconut water around the world, it's probably absolutely massive. Smoke Tuna saying getting some volume to TVRN. But yeah, here, let's get this article pulled up from us about the debt ceiling and what's going on there. Because again, I mean, this is just what there's always something right with the market that it's like, even if the economy's been holding up way better than a lot of people anticipated. We had those jobs numbers come in last week that just absolutely crushed it. Again, some people, I mean, the market killed it last Friday because of that, because these recession fears make every time we get good jobs numbers, people seem to forget that half the economists out there are calling for a recession, if not more right now. But it seems like even when we get good news, there's something else that comes up right now that also starts weighing on the market. And this debt ceiling talk is the latest. So let's go ahead and get this article pulled up. And again, this is on benzinga.com. I'll drop the link in the chat for anyone that wants to read along. But Mitch McConnell rules out helping Joe Biden on debt ceiling crisis. They're assuming there's some little secret plan here. So McConnell said in an interview on Monday that he told Biden privately it was up to him and McCarthy to find a solution, according to a Bloomberg report. McConnell, however, projected confidence the U.S. would avert a default. So this is what the market doesn't like. And we talk about this all the time with, whether it's about the macro conditions in the overall economy or specific company news, the market really doesn't like uncertainty. So the fact that we're heading toward this deadline of June 1st, and again, I don't know how, if this is exact, that this is the date that the government doesn't have enough money to pay its bills without surpassing this debt ceiling. But either way, as we get closer to there with no solution, the market, you're going to see, I think, basically, I just don't think we're going to be able to rip no matter the news about, how good the jobs numbers were, or even if the Fed is, let's pull up the CME watch tool as well. Okay. So right now, CME is saying 77.7% that we stay where we're at in terms of interest rates at the next meeting at June 14th. So, I mean, so with that said, there is the, possibility, right, that between now and June, there's some sort of solution on the debt ceiling, which the market would really like. And then B, the Fed announced that it's not hiking. So if those two things happen, I mean, we could see the market rip. But until one or both of those things, I really don't, I don't see how we're going to get super bullish activity here, which probably means we will. All right, guys, quick rundown for the rest of the show. Here in about 10 minutes or so, we will be bringing on Trent Ward, the CEO of Interactive Strength, a company that just recently went public a week or two ago. So always exciting to get some recently public companies on the show, talk to them about what they're doing. Excited to speak with Trent. And then at 12:30, we'll be talking to MoneyLion CEO after the company reported earnings. We did this last quarter. Great conversation last time. So excited to bring D back on the show as well. So let me know in the meantime, in the next 10 minutes or so, we can do some ticker time. Let me know in the chat what you guys are watching. I know Jay's watching Coco. Corey saying I would definitely check out Elmo. 0% buy tax and 10% burn for sales average. Oh, it's a token. I'm good on that. I thought there was a stock out there with the ticker Elmo. I wonder if there is. Is Elmo the new Pepe Pepe coin was the one that everyone was talking about in crypto. Let's go over. I mean, I haven't checked Bitcoin's price in a while. Oh, looks like it's fallen the past couple days. Down about 5% over the past 5 days. So Bitcoin got back up to about 30,000. Looks like it got all the way up there and could not get back above 30. Now back down to about 27. So I don't know. I mean, you guys know I'm not super bullish crypto right this instant. I have had a little FOMO that I've missed out on this whole run when Bitcoin hit. What did Bitcoin get down to? Like 15K? Yeah, about 15K. And just ran up. It basically doubled, right? It went from 15 all the way back up to 30. But coming back down here now, this chart. Look, I mean, this chart does not look great. The good news, if you wanted to say something nice about this chart, is that if it keeps going down, it looks like maybe it could be a little head and shoulders. So part of the head and shoulders would be it coming back up over here somewhere. But right now, I mean, it doesn't look like this is a great looking chart for Bitcoin. Ethereum, I assume, will look similar. Yep. Although it's held up a little bit better than Bitcoin has, at least the past week or so. So Ethereum's showing some relative strength against Bitcoin. You're not too late for Elmo. You should really take a look, my friend. All right. I mean, we can look at Elmo. I don't like these smaller coin. I mean, they are what they are. Like this is a way that you might be able to make a speculative bet on this Elmo coin and make some money. The problem is that the more it goes up, the more, it will draw people in, and the more it goes up, then the more incentivized people are to start taking some profits. And I venture to say that most people that buy Elmo, maybe if you buy right now, right, you'll still be able to make some money on it. Looks like it's only been going on for a few days now. But, wait, it's already 1 cent too. So it's actually kind of expensive for like a smaller crypto coin that I've never heard of. Sorry, Mike. I don't even know. I forget what I said, but I'm sorry. Watching more than Coco. CRISPR breaking out. LNTH near highs. Isn't CRISPR a... This is like a gene editing company? Or no? I think this is like a gene editing company. I think it's in Cathie Wood's portfolio. Yeah, it is. It's Cathie Wood's 11th biggest holding, which I actually really like that. I actually really like. I should say I've been looking at ARK. I'm not gonna say I really like ARK right now. I've been looking at ARK right now, and I've been starting to get. Like, I don't think it'd be absolutely insane to buy some ARK down here. That's all I'm gonna say. Not financial advice. I'm not even buying any right now. I haven't. All right, guys. Any other stocks we want to check out? I don't know. Why is CRISPR up? Big reason why was I thought VRTX partnership. Let me check in. Let's go to Benzinga Pro and look. Ooh, I accidentally typed in the wrong ticker and went to Casper. I haven't heard about that stock in a while. Mattress. What is CRISPR's ticker? I was just looking at it. CRSP. Let's see. I'm not seeing any. Oh, they reported earnings. There we go. Yeah, they reported after the close yesterday. Looks like the revenue came in. Wow, the estimated revenue was 23 million. Revenue came in at 100 million. EPS was expected a dollar negative. They were expected to lose $1.70 a share, only lost 67 cents a share. So CRISPR crushed it on earnings. Looks like they had a deal as well. Can you check AI? What up, Manny? How y'all doing? C3 AI is up about 1.5%. I mean, this one's been running. It ran with all the other AI names, but has now come down. It looks like a decent amount since the beginning of April. Down 42% over the last month or so. So this one's been getting kind of crushed. I mean, look. Well, I'll put it this way. I think it's clear that Microsoft has been kind of the leader so far, and well, at least in terms of public markets, because you can't invest directly in OpenAI. You can do so through Microsoft, but you cannot invest directly in AI, in OpenAI right now. So Microsoft, you have Google, obviously, who's been getting a lot of flack for the fact that Google's not as far ahead as ChatGPT and OpenAI is right now. And then you have C3 AI, which, I mean, C3 AI has been like the one that I've known about the longest. That's a pure play AI company. But, I mean, look, this thing got beaten up when growth came out of favor, when interest rates started rising, down like 90% from where it was when the markets were going crazy right after COVID. And I mean, if you're super bullish the whole AI industry, then I would anticipate this, stock doing well over time. But clearly, for whatever reason, despite the fact that C3 AI has been around since 2009. It clearly, for whatever reason, hasn't been seen as one of the leaders in AI over the past few months. Otherwise, the stock would be up a lot more. So I don't know. I mean, it would be an absolutely just botch of management if C3 AI doesn't do really well with how well ChatGPT and everything is doing. Oops, I didn't mean to click that. It's similar to how like Skype, right? How Skype was had such an advantage, such a head start against Zoom and other telecom companies. And despite that, when COVID hit, no one was using Skype. Everyone was using Zoom or Google Meets or, Slack or whatever, but not Skype. And Skype had that first mover advantage and lost it. So it's possible that even though C3 AI has been on this AI train for a while, that they're not the leader. And I mean, we've kind of seen that with Google as well, because Google acquired DeepMind, a company focused on AI, I want to say back in 2014, and has been, allocating so much of Google's resources toward AI and self-driving cars and Waymo and all this, and it hasn't really amounted to much yet. Jay Rice saying, read the AI short report. They've gone through like 10 CFOs since the IPO. Yeah, I mean, that's not... They IPO'd in 2020, I want to say. So 10 CFOs, 3 years. All right, guys. It is noon. That means it's time for our first interview of the day. Again, we're going to be talking to Trent Ward, the CEO of Interactive Strength, a ticker that just went public last week, TRNR. We'll get that up on the screen as well. But I'm really excited for this. Sounds like a really cool company. So without further ado, let's go ahead and give Trent one of our very special Zinger Nation welcomes. When we come on, we'll be talking about Interactive Strength. Trent, how's it going? Welcome to Benzinga Live.
Thanks, Aaron. Doing well. Great to be here.
Yeah, well, I know you're super busy. The company just went public last week. So before we get started, do you want to just give us a brief overview of what interactive strength is, what you guys do?
Definitely. So we go by the brand name Form, and we have connected hardware for fitness for at home as well as personal training. So live one-to-one personal training and best in class smart home gyms.
Okay, got it. I think the press release I was looking at was it's to say
Corporate
interactive
name
strength.
versus brand name, it's but don't worry about
Yeah,
it.
sorry about that. So yeah, so what was the like our impetus to start this? I mean, you're the founder. I always love connecting with founders and talking to them and hearing the kind of like origin story.
Look, I actually spent my life in the markets. I spent 8 years at Citadel, running long short equity portfolio, and I was busy, right? And fitness was hard to fit into life. And I started working at home, started seeing a trainer, in I didn't have to think about it anymore, right? I had an expert who did it for me, and it kept me in good shape, kept me, able to deal with a stressful job. And I had the idea to how do I digitize this? How do I make this more accessible to more people? And that was 2017. So here we are.
Got it. So what I mean, coming from finance, I mean, what were like the I guess like first steps you had to take? I mean, you did you have like connections that made it a little easier to raise money?
I mean, calling your old colleagues that are all at, big hedge funds definitely made it a little easier. Uh, I hustled. I raised 35 million bucks from friends and family, one investor at a time over a handful of years. We had no institutional backing. I think consumers saw the product and said, they understood how they could buy it and they could use it in their life. So it really is backed by people that know me and saw the product firsthand. And coming out to the public markets, the next step for that and bringing it to more people.
Got it. So I mean, what like I guess we saw Peloton blow up over throughout the COVID pandemic, and that kind of created a lot of people the need to be able to work out from home. But you were doing this, you were kind of like trying to figure out how you can get quick workouts in at home well before this.
Yeah, so this was before the pandemic. I mean, candidly, it was always about time, right? Time to travel to the gym, time to travel anywhere. Doing it at home, it's easier to fit in your life. The thing about fitness is it's compliance, like it's consistency that makes a difference. And the other aspect is strength training is really important. Strength training is a bigger category than all of cardio combined, and yet it's dumbbells and other stuff, and it takes up space in your house. And so, how do you digitize that? And then how do you have that coach there as well, but have it fit your life? So this was, how do you bring strength training into the home and make it easy to consume, and put an expert on the screen that's talking to you live one-to-one that keeps you from getting injured. It's something that happens.
Yeah, and I mean, so what like differentiates the Form product from other at-home workout products? I mean, I know like back in the day, I used to see those infomercials for like Bowflex all the time, and what sets Form apart?
At home fitness isn't new, right? It's always been around, right? Bowflex, down to like the weights in the basement. Digitization and streaming technology made it more engaging, made it connected. That's made a big difference. From our perspective, we also have live one-to-one training, which is basically a disintermediation of gyms, labor market arbitrage, capacity utilization, and digital distribution. So it brings costs down. So you've got super fragmented supply, super fragmented demand, and we're consolidating that. When you look at any of the connected hardware players, so Peloton, Mirror, Tonal, et cetera, they're about a $500 or $600 or $700 a year, average revenue per user on a recurring basis. We're more like $2,000, given the mixture of personal training. Not everyone does it, right? We have a similar price point at the lower end, and then at the higher end, it's more expensive. But candidly, if you're really looking for results, like working with a coach, there's nothing better. It's, AI is great. And you're talking about that just now. And for programming and doing some workouts and repetitive stuff, it works. But for motivation, like keeping you from getting injured, there's nothing better than working with a real live expert trainer.
Yeah, and I mean, this is what's really cool about this trend is that, looking at the product and seeing how like high tech it looks and everything, like I would figure that, really it'd only be available to like very high, income customer base. But looking at this, I mean, like $49 for the first month, and then 150 after. I mean, that's like what I pay for my gym right now. So it seems actually pretty affordable for, more, not just like ultra rich people being able to buy these.
Look, without a doubt, our customer base is affluent, and candidly, most people that do fitness are affluent to start with. But even within that, you can find a coach that works with you one-on-one for 150 bucks a month. It's we have lower price points as well. But the important part is if you want to make progress in your fitness and in your life, it becomes a fantastic value, right? Churn rates are low, right? People, once they see the value of it and they start, feeling better, looking better, they stick around. I think the $49 a month is really like, give it a try, right? There's not a lot of risk to it. Working with someone and helping you is candidly, a lot of us don't think we need it. And once you start working with someone, it really, really helps.
Got it. Yeah. So how, is the business model basically strictly just direct to consumer right now?
So it's direct consumer. We also have a good sized enterprise business as well. So we're selling into hotels, some of the big luxury hotels, Four Seasons, et cetera, as well as apartment buildings. So there is both sides. It's multifamily more so as opposed to gyms, and then direct to consumer as well.
Got it. Yeah, so like a luxury apartment building has a gym,
or not even if it, candidly, mid price, right? Where like a lot of the tenants necessarily won't be able to afford the device or have the space. Look, think about like you go into a building or hotel, the lobby is really nice, like that helps rent the place. So having the nicest device in the gym really helps people say, I want to rent this place. So it's a marketing tool. The fact is that we are the most premium device out there, and it is the highest design. That's one of I'd say the real draws for building owners, when is having a really nice gym, because people then want to rent.
Yeah, that makes a lot of sense, and that's why I was curious about that, because it seems like that, there's definitely be some sort of type of like B2B side of it as well, where you have those enterprise clients that, whether it be hotels, apartments, etc., that might be interested. So what's on the horizon, Trent? Like, what are you like looking forward to now that the company's public? Any big plans over the next like year, a couple years or so?
I mean, more business development. Obviously, it's hard to talk specifically about what we're doing. We're still in our quiet period, but I think definitely later this summer we're gonna have more things to talk about. But it's more awareness. We are at the beginning of the commercialization phase. I'd say we have the lowest cost base in the industry. We got the highest revenue per user. We've been able to see all the carnage that's happened in the industry and kind of adapted the business model for that. So I think we're pretty excited to be out in the world, be public, have more people learn about what we're doing, and have more consumers try the product. I think we have a good strategy of how to attack the market.
Yeah, we might need to get one sent here to the Benzinga office to try out.
I'm happy to make that happen.
Let's see if we've got any questions from the chat. Looks like not right now. So, what's your fitness routine now, Trent? You use your form?
Without a doubt. I can honestly say everything I wanted this device to be when I thought about it came true. Right, I use it all the time. It's made fitness incredibly easy for me. I have a young child. Obviously, I'm founder of a business. Life's busy, but it's really easy. So when I'm at home, I have my form lift, and my trainer programs it for me. I go in, I do a 40-minute lifting session a few times a week on that. When I'm traveling, I see him on my iPad, either programs he's developed specifically for me, or I see him live. So it travels with me. People aren't always in the same place, and the challenge, like, it takes so much effort to get on a fitness routine. When you travel or something changes and you fall off, it's really frustrating, right? To get back on. So having a coach always there and being able to fit it into your life is really key to making it habitual and making it easy.
Yeah. Sorry, go ahead.
No, I was just saying, massive proponent of weightlifting, right? I think everything out there is kind of saying it's the key to longevity, key to metabolic health. Muscle mass is what's needed as you get older. And so it's great to see that a lot of people are talking about that and understanding that now.
Yeah, I mean, definitely. And I think that's one of the things, I mean, like, kind of one of the cliche business things people are, saying, like, move where the puck's going. And it's like right now, like, so many more and more people are going to the gym, working out. So it seems like this whole industry of wellness and, gym, like fitness, wellness is just growing more and more. What, like, tips would you have for someone who maybe hasn't been as active over the past couple years and they want to be more active, but it's daunting to get back into the gym for the first time after a while?
It doesn't need to be perfect. Just start doing something, right? And start slow. Walking is great, right? That's a starting point. Just get moving. Everything in your life gets better when you move. Biggest reason to work out during the pandemic was mental health. It's longevity, right? I think people are starting to understand that fitness and movement and activity is the basis of a healthy life. I mean, I think we all know exercise is necessarily good for you, but historically the whole industry has been about weight loss, and diets and other things. And I think as we learn more, we're starting to realize activities had so many other elements to it. How the effect on your mind, effect on mood, all your choices in life. So making it a habit is step one. And that starts with just doing something. Don't wait for it to be perfect.
Yeah, I forget. I know I saw an interview a while ago. I think it was with like The Rock, and he was talking about basically, like, create a habit of just going to the gym. He was like, I don't care if, like, you literally just go and, like, read a magazine at the gym one day, but if you just get in the habit of, like, going every day, or in this case, hopping on the form every day, then eventually that gets, like, habitually drilled into you, and it becomes second nature to, like, go to the gym and want to go, instead of it becoming so daunting.
I mean, like, only 20% of people in the US work out, right?
Really?
Consistently. It's, and
it doesn't feel like it when I pull up to my Lifetime parking lot and I can't find a parking spot.
Well, that's the 20% that they're there. But it's something that a lot of people wait until too long. And so it's I think just getting more people moving, giving them a reason to, that's not just tied to kind of some of the traditional use cases. Spend time with people that are active. It's a good thing. I don't think there's anyone that's ever worked out and felt worse, right? Like, you always feel better. Still hard to get going. I mean, even for me, right? Like, I know all of this, but it's still, you're tired. It just, so anything, stretching, moving, breathing, it's just get your body moving, and everything kind of starts to click.
Yeah, I mean, it's again, like, the longer you go, I think the longer the hiatus is, the longer you go without going to the gym, the harder it is that first time. But then, like, it's like you said, it doesn't have to be perfect. Just kind of start slowly, and then make it a habit. But Trent, this has been an awesome conversation. This is a really cool product. I'm excited to follow along on this journey as you guys are growing and doing more business. And if you guys have any updates that you want to talk about, come back on the show. Would love to have you.
Awesome. I'm going to see you a lot then. We're going to have a lot to talk about.
All right, awesome. Well, Trent, enjoy the rest of your Tuesday. Again, I know you're busy the past couple of weeks, just went public. Did you go to, like, the NASDAQ and do, like, any sort of ceremonial stuff, or not yet?
Not yet. I'd say naively, I thought that, like, you did that on the day, and it's more of a scheduled thing.
Okay.
But yeah, no, we'll get to that soon enough. But it's exciting to be out there.
Yeah, there you go. Well, again, thanks for hopping on. Ticker TRNR. I forgot to say, by the way, I love anytime we get a ticker that is like related to the business. I get it now. Trainer TRNR. That's a good ticker. So I don't know if that was you specifically that selected the ticker, but if so, good job.
Yeah, you sort of throw names into a bucket and see if they come back as like if they're available. So that's one that landed.
Well, that's got to be like the best part about starting a company and going public is being able to pick the ticker.
It's like naming a child.
Yeah. Well, again, Trent, thanks for hopping on. Good luck. We'll be talking soon because I know once you get out of the quiet period, maybe we'll have some more news that we'll want to talk about. But again, enjoy the rest of your day, and we'll chat soon.
Awesome. Thanks, Aaron. Take care.
Of course. All right, guys, that was Trent Ward, CEO and founder of Form, ticker TRNR, now trading on the NASDAQ. And by the way, having a big day today. Looks like the stock's up 18% today. $4.17 a share. So we'll be watching that now. We'll put that one on the watch list for sure. Because honestly, like I had this website pulled up. Like these look pretty cool. I'm gonna have to talk to AT. Someone put a note in that we need to follow up with Trent about what we need to do to get one of these in the Benzinga office. We'll all start looking better. We'll talk to Jason. We'll talk to Luke and talk about how working out will all be more productive. It'll pay for itself. But all right, guys, let's go back to our Benzinga Pro. Check out what the overall market is doing. Looks like nothing great today. Maybe just digesting everything that happened last week with the crazy day Friday after the jobs numbers. Honestly, I wasn't in the office yesterday, so I didn't really see exactly what the market did yesterday. Looks like we were down a little bit as well. But going over to some more specific stocks, of course, you had Apple last week report earnings. Did well. Looks like the report was pretty good. I don't think it absolutely blew everything out of the water, but it did well, and now is trading down a little bit today with the overall market, but still hanging in there. You know what's been dragging today? Our financials. Look at FRC. Sorry, not FRC. Look at PacWest stock, down 5%. Look at Colin Frost stock, down 2%. Look at Stiefel stock, down 1%. What's the other one? Western Alliance, down 4%. So regional banks still not getting a lot of love out there. Trainer. What up, AO? Haven't seen this guy in the chat in a while. We need AB on the streets of the D. Oh, wow. There actually are a lot of people out on the street right now. We should go do that. Is the company profitable now, or when is it expected to be? That would have been a good question to ask Smoke Tuna. Good call. JP Morgan stock down about 0.8% today. So, yeah. All right, guys. So, in about 10 minutes or so, we'll be talking to D from MoneyLion. Again, excited about this one. Company reported earnings, I believe yesterday afternoon, as well as announcing a steady path to profitability. So that sounds good. Get over here. Someone dropped 9 ETH on Elmo after I pulled it up. Look, I don't want to talk cryptos unless we're talking about what was the one I liked? Shiba. Obama Sonic. How's that one doing, by the way? Coin market cap. What are we looking for? Elmo? I'll tell you what. I know what's going to happen is I'm not going to buy any of this, and then you guys are going to be back in the chat tomorrow, and you're going to be like, LOL, Aaron, it's up another 800%, like we told you so. And I know that. It's 1 cent right now. The thing is 1 cent. Oh, it's about 1.5 cents. Almost, it's closer to 2 cents right now. We'll round up. It's 2 cents. If I had an easy way to buy just some for fun, just for you guys, I would. I don't. Wait, where? How can you see? Where can we see how many people are buying it? Someone just said someone with a bunch of ETH just bought it. What's the market cap on this? 6 mil. All right, so it actually isn't that huge yet. I know what's gonna happen. I'm not gonna get into it. It's gonna end up running, but yeah, it is what it is. What was the one I wanted to check out? Sonic, Obama, Sonic, Harry Potter, Obama, Sonic, Unu 10. Man, this thing's been a disaster. Who would have thought? Not me. I thought this thing was going to the moon. Market cap 200,000. Fully diluted market cap 750. What does that mean? Why is there a such a big discrepancy? Oh, if the max supply was in circulation versus just what's in circulation right now. All right, what else is going on today? What else is the big news? What did I miss while I was out? Let's do this. Let's just go to benzinga.com, see what our top headlines of the day are. All right, Fed Chair Jerome Powell grapples with record low confidence levels amid escalating financial worries. Yeah, my man JP, look, he's had a tough job. Gotta say. Nothing in my opinion. Maybe go back out. Yeah, I mean, honestly, like, seems like not much happened. American citizens' trust in Federal Reserve Chair Jerome Powell has reached an all-time low, dipping below the trust levels of any other Fed chair in history, according to Gallup survey released Tuesday. All right, I will say though, all right, I guess that's actually surprising considering like we've been through some tough financial times in the past. The data comes at a time when insurance costs for U.S. debt default risk hit their highest since 2009. The percentage of U.S. adults with a great deal or fair amount of confidence in Fed chair fell from 43% to 36%. The lowest ever recorded since. Here's what's honestly funny to me about this is that you have, all right, so if 36% have confidence, that means you have 64% that do not have confidence. Quick mental math there. It's funny to me, I think, that the 64% that do not have confidence, they're probably coming from all across the spectrum. You probably have people that are pissed that we haven't raised interest rates enough and inflation is still high. And you probably have a lot of people that are pissed we've raised interest rates this far and want him to cut. Everyone's got their own opinion about what the Fed should be doing. I said that the Fed was making a mistake when it, kept raising interest rates a while ago. And I thought essentially the Fed was engineering us into a recession and then it wasn't worth it just to try to combat inflation. And hand up, I was wrong. And I was like, hey, maybe these guys that, have spent years and years and years studying the economy and have done different things, and they have a whole board of different Fed governors and Jerome Powell, maybe they know more than me about this stuff. I don't know. But either way, I was completely wrong about the economy just kind of going into a tailspin after the Fed raised interest rates above, say, 3.5%, 4%. However, with that said, now that you are seeing some of this contagion throughout the banking industry and these regional banks starting to, seemingly drop off like flies, it does seem like the question again we have to ask is like, all right, if inflation is on the right track and coming down, is it really worth it to raise rates to the point where, more and more banks are failing, potentially causing even more economic catastrophes? So, Powell received the highest level of trust among Americans. All right, well, who would have thought that Powell had the highest level of trust of Americans is when we were sending out a bunch of checks? Hey, I liked him too then. I like him still, honestly. Like I think, like I said, I think Jerome Powell's had just a very he's been you're basically between a rock and a hard place with Fed policy right now. You either stop cutting and people on the business side are happy and that we have a lot of probably have a lot of room to go in terms of market growth if the Fed does announce that it's done cutting. But then you have the potential that inflation starts to heat back up again and people are pissed, basically saying, hey, we were so close to stamping out inflation, and then the Fed stopped cutting rates. So I get why Powell, I don't know if it still is right now, but go back to a year ago, 6 months ago, inflation was the number one thing that American citizens were worried about, that voters were worried about. So if you're Jerome Powell and you know that, you're going to say, all right, well, let's deal with that first. That's what people are the most pissed off about. Of course, you have to have that discussion of, all right, well, is it worth getting inflation down to 2 if it means we're going to enter a recession? That's, and then I think you would probably have to determine what type of recession. Is it a mild recession? Is it a severe recession, et cetera? The lowest previous level of a trust was in 2016 when Fed Chair Janet Yellen. Why was it so low in 2016? I wonder what what was going on with Janet Yellen in. Oh, maybe it was. It was before Powell came in, which I know Trump is the one that nominated Powell. So maybe Yellen and Trump just weren't getting along. I don't really remember. And I mean, right now, unfortunately for Powell, it's not just dealing with. Look, Powell's been in a tough position over the past year and a half, since the pandemic, really, with the inflation, because you have, raising interest rates isn't popular. It's not popular among a lot of, basically anyone on Wall Street. Unless you're short, then it's popular, or you're long bonds, but or you're waiting to buy bonds. But anyway. He's been in a tough position over the past year or so, and it's only getting tougher because not only now do you have unemployment and inflation to worry about, you're also worried about people, with their housing prices and mortgage rates. Now the regional banks, what's going on with those, and the debt ceiling that we're running into at the beginning of June. So Jerome Powell has all these things on his plate. I honestly think the fact that our economy has been so resilient and been doing so well, he probably deserves a little bit more credit here. Now, I don't know how much credit he really deserves for the economy and jobs numbers being so strong over the past 6 months, despite interest rates going up, because I don't think he expected that. Powell was basically saying 6 months, 8 months ago that hey, expect some pain in the labor market. We're raising interest rates, right? There will be some pain in the labor market to bring inflation down. We haven't really seen that. In fact, jobs numbers have just been getting stronger and stronger. So I don't think that was his plan, is all I'm saying. I think he accidentally basically wandered into what we've seen so far, which has been what a lot of economists really are confused about, is you have inflation and unemployment dropping at the same time, which, typically doesn't happen. All right, guys, it is 12:30 p.m. Eastern. That means it's time for our second guest of the day. D. Choubey from MoneyLion will be joining us to talk about the company's earnings. So without further ado, let's go ahead and give D our very special Zinger Nation welcome. Hey, D, how's it going? Welcome back on Benzinga Live.
Thanks for having me, Aaron. How are you?
I'm good. Look, I know you guys are busy. You just reported earnings. Was you guys report this morning before the open?
Yeah, we reported this morning. We had very strong earnings, and I was listening to your previous segment, right? And what we're seeing is that it's a tale of two cities and tale of two halves of the economy right now, right? It's the hardworking Americans have never had more job opportunities, and we're seeing that play through in our numbers. We provide digital banking, Instacash, credit building loans to the mass market on one side, and then we have an enterprise business. So the two together are actually fundamentally performing really well, despite what it may seem like in the stock market.
Got it. Yeah. So let's before we get into the earnings, do you mind giving just a brief overview for maybe some of our audience members who weren't here the last time you were on about Exact? I mean, you mentioned it there, but about exactly what MoneyLion does and what you guys are doing.
Sure. So we are a fully integrated consumer app, super app, if you will. And we also have an enterprise business, and the two work really well together. We also have a media arm, right? So we have the ability to really offer our products to the 90 million Americans that are self-identifying as struggling with financial services, provide them first-party products like banking, credit products like Instacash, and Credit Builder Plus, investing, so you can trade stocks, you can trade crypto, you can invest in a robo-advisor on MoneyLion. But also, when you need that insurance or that mortgage or that auto loan, we match you with the best financial products that are in the market. So you may think of folks like Credit Karma or Lending Tree or others that perform those. Sometimes they're partners and sometimes they're aggregators into our ecosystem. And then we also have a media arm that helps tell stories around financial success, financial stories, money lives, money hacks, and we put them all together to really create a comprehensive assessment of a consumer's daily money life, if you will.
Got it. Well, thanks for taking us through that. So, the gap revenue was 94 million, up 34% year over year.
Yep.
This all sounds pretty good to me. Why do you think the market isn't reacting as you would probably like, despite this these strong numbers?
Yeah, look, I think the short-term machinations of the market, I've tried to become really smart and expert in terms of how the technicals move, but, I just got off of all hands with the team. And we keep reiterating that it's, Warren Buffett's quote or Benjamin Graham's quote that in the short term, the markets are a voting machine. In the long run, they're a weighing machine. And I think Jamie Dimon reiterated something very similar, that we want to have long-term compounding growth. We went public. We saw the sort of growth in tech and SPACs all get hammered. Now we're going through sort of a regional bank crisis. All things said, we're performing incredibly well. We're managing our balance sheet very smartly. We have to continue executing. We're a young company. We're young in our in our evolution as a public company. We're a year and a half in. So I think we need to continue convincing investors that we have the most durable business model, that our AI-driven risk models, our AI-driven marketing are all increasing conversions and efficiency more than ever before, and that our unit economics are really robust and resilient. They need to see that over a couple of quarters, and I'm positive that in the long run, we're going to be creating a lot of value for shareholders.
Got it. Yeah, I mean, it's always interesting, and I don't need to tell you that sometimes, the market just reacts, like you said, in the short term, very erratically. So, I see in the first quarter of 2023 added more than 1 million customers, which is up more than 100% year over year. What are you guys doing to maintain that growth? I mean, are you expecting to keep adding as many customers in the next few quarters?
Yeah, so we acquired two companies over the last year and a half. One was the media company and one was the marketplace company, formerly known as Even Financial. We then rebranded it to Engine. So again, we have 1,000 partners there, right? On the one side, we have suppliers. Benzinga, I think, is one of them, and others that take consumer demand and say, okay, you're looking for a mortgage or an insurance product or a mortgage product or auto loan. And we match them with the best fintechs and the best digital banks and the best money center banks. And that creates a lot of interaction. So the more people that come through that network, the better we understand the needs of the next consumer that's coming in. So you think about LLMs, ChatGPT, they're all models, if you will, but the white truffle is the data set. So we're massive. Every day we're compounding and increasing the observations of the data, which then helps us go back to the consumer side, the MoneyLion app, which you can download in the App Store. and then have a real personalized and contextualized experience and conversation with consumers. So that virality, that's increasing by word of mouth, that's increasing just organically. The product is getting better. Our ability to help the consumer in more inflection points is getting better because now we're bringing in all these third-party financial products. And together, I think the synergies are finally coming out. We didn't necessarily see the synergies fast enough last year, but we're finally now hitting our stride and showing the synergies, and that's what's driving really high-quality user interactions at the top of the funnel. And then we use our content creation capabilities, our original series, our award-winning original series, our content, our app, our capabilities, the destination, to really then engage and monetize those consumers over a long period of time.
Yeah, I'm sure. Oh, sorry about that. I don't know. I'm sure it's great to see that kind of organic growth through that hard work. Speaking of content, so one thing, one of the hottest topics in investing this year has been AI. Has there been any talk about how the company plans to implement AI moving forward, if at all?
Yeah, look, I mean, I think for us, AI, when I started the company with my co-founders in 2013, we were tethering multiple computers together to do parallel processing to generate AI-driven insights into when consumers would have money and when they would run out of money. We created a whole lending apparatus around that. So if you look at some of the success that we had in the quarter with Instacash performing well, AI is already inbuilt into that, right? So we have millions of interactions with consumers with zero human interaction. It's already built into the product. But I think you're right that there is a massive iPhone moment happening as we speak, where AI is going to change the way we do PowerPoints, the way we do Excel sheets, the way. So we think of it in two ways. We think of it, how do we improve the consumer experience? So AI-driven chatbots, AI-driven personal financial management. For our first-party customers, we know their bank account transactions. We know when they get paid. We know how quickly the paycheck decays. We know how they invest. We know their goals. We know their aspirations. We know what they want to spend on. So together with that information, we become the shortest distance to action for our consumers. So that's already being implemented and showing great engagement and great increases in the daily active usage of our product. Internally, we also have the ability to now use ChatGPT and other LLMs to onboard new engineers faster, to give superpowers. I'd say to my team all the time that this is my favorite coworker is I can get better scripts, better strategy, better insights faster and cheaper than ever before. So I think it's here to stay. We're excited to leverage all the capabilities. There's already, if you download the MoneyLion app and link your bank accounts, there's already going to be AI-driven insights and memes and jokes, all created on your own financial data. It'll tell you a joke about your Starbucks spend or your Taco Bell purchase, or how much you're paying on your Geico insurance, right? So those are one element of it. But this vision that we've always had to really drive to self-driving finance certainly becomes a much easier and much faster value proposition. I think that it's going to completely revolutionize personal financial management.
Yeah, I mean, if I did it, it might make a joke about my my DraftKings deposits.
Exactly, we see that with our consumers. DraftKings, BetMGM, they're all partners of ours as well. So, on the media side.
Yeah. Well, so D, I mean, we're as crazy as it sounds. We're already into May now, almost halfway through 2023. What are you most excited about for the rest of the year in terms of MoneyLion's growth?
Yeah, look, I mean, our customer acquisition and life cycle strategy is working. We had 34 million total inquiries in Q1, 1.3 million new total customers. We don't see that stopping. We see that accelerating. Our unit economics continue to be incredibly powerful. Even though we saw a slight increase in CAC in Q1 to $15, that's still industry leading. And we made that strategic decision to increase that CAC because we're just seeing lifetime value go up, right? So we're making $50 on a customer in Q1 2023, right? And we get a payback period of less than 3 months. So why not continue increasing that customer growth? So, the strategy for the rest of the year is to be greedy on both growth and profitability, because we know that the markets, are very discerning right now on anything that's losing money. So first and foremost, we want to tell our shareholders that we're going to be managing the balance sheet incredibly precisely. We're looking at it like a hawk. We're investing in things that make money, but at the same time, we're balancing that with innovation. We just talked about AI. We talked about other ways to really be the best consumer app, the best money app in the world. And that's the bar that we hold ourselves to now. And I think, you'll see this across tech, is that management teams and operators are really trying to thread the needle between reasonable growth, but driving EBITDA profitability and cash flow generation.
Got it. And then so D, I mean, what other industries right now? I mean, we talked about AI. We mentioned gambling. Are there any other industries just in terms of the market right now that you have found that like customers are super interested in? I mean, I know like crypto's kind of gotten a little bit cooler, we can say, after from where it was during COVID.
Yeah, look, from our customer base, they're the sociable strivers, right? So they're trying to make the right decision to get ahead. And what we're seeing is a massive demand for high yield savings, especially now in the digital world, where with one click you can open a bank account and you can get some yield on that cash. I think we're seeing less speculative, kind of investing than we did maybe in the pandemic era or even a year ago. But we are seeing more, responsible financial behavior, which is good. And if you think about the banks, the regional banks, they need deposits. So one of the ways that we were able to mitigate some headwinds in the advertising space for our enterprise business was by really going deep into matching consumers with high yield savings accounts and CDs. That serves a big need for the demand partners, because the banks are looking for deposits. They're looking for every new channel, every new opportunity to compete for those deposits as they're fleeing the regional bank system and going into money center banks. And we're seeing a equal amount of consumer enthusiasm and saying, hey, we've been in the zero interest rate policy. I think you were talking about Janet Yellen in 2016 in the earlier conversation. I think that, she and other Fed leadership were running effectively for 16 years a zero interest rate environment, right? And I don't think a lot of younger consumers, or even folks that are mid-level millennials or older millennials, ever had a regime where their dollar was earning them upwards of 5%. You can even perhaps even get a 5.8% on a 12-month CD. So we're actually seeing a lot of consumer demand and interest and acknowledgement that, wow, this is actually pretty interesting from a saving perspective.
Yeah, it's always funny whatever's hot at the time, because I know it's kind of peaking in a way when my mom reaches out to me about it. And that happened in 2020 with crypto. She was like, I want to buy, Bitcoin. And then she reached out, a few months ago, like, how do I buy treasuries? I want to get some of these. So I was like, yep, this is that's what people want right now, is they want the safer investment. They want and even if it's not, essentially like the risk-free, T-bills or whatnot, at least what I've seen, and from people I've talked to, I've seen a lot more investors, even my age, talking about, okay, I'm going to buy, this ETF, or buy, just keep, put a recurring investment into the S&P 500, as opposed to, buying the, Tesla or whatever the highly, speculative growth stock is at the time.
Exactly.
Well, D, is there anything you would like to discuss that we haven't gotten to yet?
Yeah, look, I mean, one of the interesting things that we saw in Q1, that over 90% of our adjusted revenue was coming from historical cohorts, right? So this is a incredibly interesting, kind of KPI that we measure. It shows that most of our revenue comes from recurring usage of our product, right? And that happens both in the consumer and the enterprise side. So, we feel like, again, the markets are really, really awkward right now. It's never as good as it seems. It's never as bad as it seems. It feels like it's going to be volatile. And we tell our teammates and colleagues that it's going to be volatile for the time being. But, my message to investors is that, look, in the long run, we're building for compounding success. We have one of the most unique sets of capabilities in fintech inside of MoneyLion. And all I ask for is patience, because we are working 24/7 to execute towards a pretty broad, strategy and vision here.
Well, yeah, D, again, congrats on the strong quarter. And thanks for joining Benzinga Live. We'd love to have you again in the future. Anytime you guys have updates and you want to hop on, always great to talk to you and get some insights from the fintech space.
Thank you. Talk soon, Aaron. Bye-bye.
Yep. Have a good one, D. All right, guys. That was D, the CEO of MoneyLion, ticker ML. If interested in that. Well, with that, what do you say we wrap for the day? And we'll be back on. I'll be back on Thursday. Y'all might see some more of me. I mean, next week. Next week, I just got a call. I'm called into the big leagues next week. I'm gonna be on pre-market prep for a couple mornings, so I'll see some of y'all next week. So, all right. With that, peace and love. Please smash like if you have not already.